Hi, everybody, and welcome back to the Last Honest Realtor podcast. I am your host, David Fleming, and today I have brought with me a friend because for the first 4 or 5 episodes, or I should say the inaugural 4 or 5 episodes, it was just me talking about some stuff that I like, and it was fun, but I need another voice today because I want to talk about where the market is, where it's heading, and I want to talk stats. I want to talk economics. So Chris Cansick is with me. Chris has been working on my team for 10 years. Hell, we've known each other since...
Friend and colleague.
Friend and colleague.
I noticed you introduced me as friend first,
I did say
which
friend.
I'm flattered to hear.
We're friends.
We absolutely.
He was my brother's friend growing up, but as my dad said, I wasn't good at making friends, so I had to take my brother's. It's kind of true.
Well done.
So Chris and I work together on the team, obviously with Matt and Tara and Richard. And I don't want to pigeonhole you as the stats guy, but me and you have some pretty good conversations about economics and about statistics and everything like that. So when I'm looking for a conversation or, as often is the case, an argument or a contrarian viewpoint.
Yep, fair enough.
And go to Chris. So this is what I wanted to talk about today. We're in July. We're in the summer market. Are we in the summer market? Is there a summer market? What in the world is happening? So I'll ask you, what is your perception of this market? I will share mine afterwards. But where are we, a week into July?
Well, I think most people know that summer's typically slower than the spring, right? The spring is kind of our peak season. This year is a little bit different. Mainly because, I don't know, we came off pretty much the worst fall market or winter market of 2023 I've ever seen in my career. Would you agree?
Yes. Last fall was probably the toughest market I've worked in. I mean,
you say toughest, but there were some great opportunities out there too. I remember thinking, I closed a few buyers in the fall, and I know that we got like the best deal ever, it just there's opportunities in any market.
Well, it's funny. I don't want to say that I'm a listing agent. I'd say probably 75% of my transactions are listings. Of course, I have a team and we work collectively together. So it's funny. I say it was the toughest market and you're out there shooting fish in a barrel.
Well, yeah, from the buy side, I guess, but
it was, love that.
The absorption rate plummeted. And I know you're going to speak about that a little bit later.
Yeah.
But yeah, it was a tough market for sellers for sure. And then, as is fairly typical, the spring market showed up this year. And I think it surprised us all about how strong it was, right? Mm-hmm. I mean, from November of 2023 to March of 2024, it was night and day.
Mm-hmm. Yeah. And I would say that when we met, January, and we sat down and said, what are we expecting this year? I said, I think this year's going to be front loaded, right? So Jan, Feb, March. And to some extent, and again, we're looking back on this with the benefit of hindsight. I mean, June, which we'll talk about, absolute, just danger zone, right? There's nothing happening in June. Now, I wasn't exactly right because things started to pick up maybe halfway through Feb or first week of Feb. I remember writing a blog post about it. The market's back, showing properties getting 20 offers, and that continued. And for you working as a buyer agent, you're trying to beat 10 other offers. For me as a listing agent, I'm sitting back and thinking, well, this is nice.
Well, and that's why it's so crucial. Like when we track the amount of listings that are in a specific area, right? Mm-hmm. You can sense the market changing before the stats even come out, right? Like the average prices or anything like that, right? I know you were tracking in the East End when you had that one listing on, I think, Woody Crest.
West. We've had a lot of W's this year.
Yeah, a lot of W's.
Yeah, and that to me was sort of, as you're describing, I feel like you're sort of starting from last fall, moving through the spring months to get us to where we are now. You raise a good point, and I'll tell this story. I met these folks last November. They had unsuccessfully listed their property, and they did a lot of the right things, but a lot of it was market based, and they could not get a sniff of an offer at 1.2.
This was in the fall of 23.
Yes.
Yeah.
And then we said, we'll list it next year, but we'll wait until the market's about to take off. Now, Chris, you would be the first person I would say, don't ever tell a client you can pick the right time, right? People are like, just let me know when we're at peak. But for these guys, the strategy was, let's get everything ready to go. And they, of course, were doing minor renos. They took down a wall in the basement that Lucy, our stager, and I said, open it up a little bit, redo some flooring. So they had work to do, but they also got everything out of their house and they were ready to go so that if we said now, we could be on the market, staged, photographed, home inspection in a week. That was the second week of February.
Yeah.
And I said, guys, now. And to their credit, they did. And we got 1.4 for that house that they couldn't sell for 1.2 or anywhere close to it in the fall of last year. And that was, I'd say, kind of the beginning of a 2-month period this year when things were really busy.
Yeah, and I think that was actually a big difference this year as opposed to like the prime spring weather months where we usually see kind of our peak season. I remember sitting in the boardroom next door talking about how this year was going to be front loaded. And I think, we got a lot of listings out early before inventory started to climb. And that was crucial.
Yeah. And then we catch up to, I guess, May? Remember at the beginning of May, we kind of said like, oh, it feels like things are slowing down. Then we had, I don't want to say a dead cat bounce. We had those couple of really big listings. One of them was on Woody Crest, which is a crazy one. But it started to slow down. Then we had some great listings that turned into great sales. And then we hit June 1st.
Right. And all that while you could see the listing dates failing. You could see, how the listings were changing.
Offer dates.
Right? Yeah, the offer dates. Sorry, the offer dates were failing. They weren't, not as many properties were selling on their offer date.
Yeah.
They were relisting the next day. All that contributing to like more and more inventory in a certain area. So you could kind of get a sense that as inventory was growing and on the buyer side, I could see the demand dwindling a little bit as we were kind of coming into the summer. People are making summer plans, which is fairly typical of any summer market.
Yeah.
So you could feel it. You could feel that shift, and I think now that's exactly where we're at. I think that a lot of listings that are coming out now are coming out without an offer date.
That's changed.
They're pricing at market or just maybe even above market, looking for an offer anytime. And I've seen starting to see some good deals out there. I think this is when I like to go shopping, is in the summer months, right? That's where there's opportunity out there for sure.
Again, he's thinking like a buyer agent.
Yeah.
I'm thinking like a listing agent. We're like opposites, enemies, you might say. Just kidding. So I would say that yes, it changed in June. And let me give you some data and some stories to kind of explain how it changed. I mentioned in May, we had a couple of sales that I wouldn't say they were surprising. I'd say that we started to feel it slow, then it picked back up. What we began to experience in June, to your point, was offer dates failing. So for those that, I don't know, have been in a cave for the last 20 years, properties in Toronto, they're listed low. There's an offer date.
Drives everybody crazy.
Right. And we expect multiple offers. You got $1 million house listed at $799, set an offer date. You're going to have multiple offers. You're trying to drive the price past perceived fair market value. So here's a question for you, Chris. In a typical market, say fall, September, October, say spring, March, April, in the central core, what percentage of offer dates are resulting in a sale in your estimation?
I mean, ours would be 100%.
Yes.
I mean, that's not,
fair.
Yeah,
we're not.
Or maybe 99. I don't know. Maybe
we're not. No, I mean, we're not being cocky. I mean, right? We sell.
Yeah,
but
no,
let's
that's not a
say
brand.
generally speaking.
Across the board, I would say in a seller's market, I would say between 80 and 90%.
Okay, yeah,
I was 80%.
I was literally going to say 85%. So what I started to see in June, and I had a listing that I thought, again, lots being made right now of seller expectations in real estate offices. Be honest with the sellers, let them know that the market's dropped off. A lot of real estate agents, they get into trouble because they don't want to have difficult conversations. But I started to notice the market was changing. I was letting my clients know. And often it's very difficult for people to understand or comprehend the market changed since 2 weeks ago.
Well, and it's fickle. I think that's the biggest challenge I have with buyers and sellers is just trying to explain how fickle the market can be and why it's so crucial that if you are going to buy before you sell or sell before you buy, that you do it in the same market, regardless of what market you're in, right? I mean, I think the last thing you want to do is get caught in a changing market if you're buying and selling. Yeah. And so having people ready to go or having your property ready to sell if you're looking to buy, or again, do all the renos and stuff ahead of time so that you're ready to go when your agent tells you that now's the time, is absolutely crucial to capitalize on a good market.
Yeah, and it's tough to time the market, as we know, but I would say that when we hit June and the offer dates, they weren't always producing sales. We started to see, oh, hey, that house didn't sell. It got relisted. Now, when it first started happening, remember there was one on Riverdale. They had an offer date. Oh my gosh, it didn't sell. They raised the price $200,000. They sold pretty quickly. In fact, we had one, Matthew and I, where, and this is very interesting, follow the data here, folks. This was just as things were starting to turn in May. We had a property that the clients of Matthew's, they bought it for $1,050,000 2 years ago. Mm-hmm. We listed it for $899,000 with an offer date. We had 0 offers. So that's the buyer pool saying, we're not stupid. And again, a lot of buyers and buyer agents, maybe they are a little bit stupid. In this case, at $899, no one made an offer.
I mean, there's a lot of buyers just not interested in competing.
Right. And that's what happened.
Yeah.
So then we raised the price to $1,149,000. We sold it for $1,125,000 in 2 days. That was what was starting to happen in May. The relist wasn't the kiss of death because don't worry, guys, we're going to sell it after the relist. So I mentioned the one in Riverdale. It was a great house. They sold 2 days after they relisted. Matthew and I had that one. Then we hit June. And I feel like June 1st, everything changed. And we started to see offer dates fail, not here and there, but with regularity, especially on the east side where we do a ton of listings. And so again, for you as a buyer or agent working with buyers, it's great. I'd be interested to know how your strategy had changed. But for me in June, I go back to seller expectations and say, I just sit down with my clients, explain the market's changed. You might get a little bit less than you'd expected, but hey, you're going to get more than you would in January or maybe February. You're just not rolling off of May peak. Some sellers absolutely refuse to accept anything but a record price. And others are like, yeah, hey, we get it. So we started to see offer dates fail. I had a listing on the east side, which I thought might be a bit tricky. So I put together in a shared Google sheet in our Google Drive and sent the link to my clients, every single listing on the east side in their price range that was listed. And I had a column for offer date, then I had a column for sale price, and then an update. And what I saw in that first week, so you had said what percentage of listings do you think sell on offer night?
In a good market, between 80 and 90%.
Okay, so the first week I was tracking this, it was 35%.
Yeah.
The second week, it was, I think, 25%. And the last week, it was 20. It was literally dropping. Now, again, that looks like a perfect downward curve. Maybe there was some coincidence there. But point being, we listed, and I said, guys, 20% of offer dates are resulting in a sale. You have to be prepared for plan B. And that is exactly what happened. We had 2 crappy offers on the offer night, to which some agents said, at least you got offers. We were able to page it out through Broker Bay. That's our system for all showings and offers. The agent community said, oh, wow, they got 2 offers. And then we did eventually sell it, but it's a completely different market out there. That, folks, was the month of June, which I think now, roundabout way of catching us up to
where we are now. Yeah, I think that's the canary in the coal mine, right? And that's generally what the general public doesn't see, right? We can see all the average prices and the active listings. That's all public knowledge, public data. But the number of offers on a listing, nobody sees that except for agents.
Yeah.
And so when you start to track, how many offers are on each property, how many offer dates fail and the property's relisted, that is really telling of where the market's headed. And I think that's kind of where we are now. Inventory continued to grow throughout the month of June. And, we'll see where the stats come out this week for June. But, I expect that we'll probably see a little bit of dip in average price. And I would expect that we're going to see listings tick up a little bit too.
Yeah. And Chris raises an interesting point. So this podcast is launched on Friday. The TREB stats, I'm hoping, come out on Thursday. We're filming this on Wednesday. And so coming into this, I was saying to Jonathan, maybe we should wait until we have the TREB stats.
It's more fun this way.
Yeah. Well, that's the point, right? It's so like, no, in seriousness, Chris, like we thought, okay, every single person out there, and believe it or not, we're not the only podcast. I think like literally every
Who isn't doing a podcast now?
Right. My mother's, she will soon, but every real estate agent has a podcast. Okay. Right. So we weren't exactly new to this, but every agent, whether it is, through word of mouth or whether it's in their newsletter or whether it's on a podcast, they're all going to talk about the TREB stats after they come out. I want to talk today about them before they come out.
Well, and we do our newsletter and, we have all that other publication.
Oh, sure. I'll post next week on Toronto Realty blog.
Yeah, absolutely.
But the point is this. We just talked about how tough the June market was. And again, a lot of agents, they don't want to talk about tough things, right? They don't want to put that out there. But I want to see if the conversations that we're having and the stories that we just told are going to line up with what you had just sort of predicted, which was what? Sales are low and prices drop?
The canary in the coal mine is that inventory starts to rise, demand starts to dwindle a little bit, which is typical of any summer. Buyers just disappear and to some extent so do listings. This year is a little bit different. I think we'll see more listings on the market, less buyers, and that probably means that you'll see some downward pressure on prices. But I'd be remiss not to mention that I think we're also seeing, like a tale of two cities here, right? I mean, you've got 2 very different markets. I can look at average price. I can look at the home price index, which includes, a large geographic area, condos, detached, semis, towns, everything. But the condo market versus the freehold market are doing, I think, very different things right now.
Yeah, and I think that will be very evident in the data. And so, I'm not one for predictions, but having decided to film this before the Treb stats come out, I think that the June sales data will be among, and I always track data from 2002 onward. I think that's because that's when the Treb districts changed. I think if you go to Treb's archive, they've been producing Market Watch since 1997. But the sales in the year 2023 were the lowest this millennium. And we are right now on pace to see fewer sales. So when you say I think sales are going to be low, or I say I think sales are going to be low, we're not exactly like, reinventing the wheel here. I think that's almost a certainty. I think price, which I had hoped and I had been watching, I read a lot of stats blogs. I thought the $1.2 million average GTA home price recorded in May of 2023, I had hoped that that would be surpassed by April or May or June of this year. That's not going to happen. The average home price last month in May was $1,165,000. It was up modestly over April. Do you think we're going to see that price decline in June?
Yes. I think, which is typical of even in the healthiest market or the seller's market, we see a little bit of a drop through the summer months. And I think we'll probably see that for sure this year.
I do too. I think we're going to see that drop. And you had mentioned Tale Two Cities, condos versus freehold. Let me come back to that in a minute. We're going to take a quick break here just to catch our bearings. Because the other thing I want to talk about, in addition to the Tale of Two Cities, the housing market versus the condo market, is where the heck all the buyers have gone. Okay, so before that break, we were talking about houses versus condos. Chris, let me do my thing first, and then I want to come back to you because I know you wanted to touch on that. I wrote a blog post May 21st of this year, and it was called Where Have All the Buyers Gone? So before the break, we were talking about all-time low sales. Here's what I came up with. My first point, the 2023 holdover buyers bought early on. We're talking about all the folks that you had. You said you got some great deals in 2023. You must have had people that weren't able to secure something and came into the year looking to buy.
For sure. But then, as the market starts to gain pace, right? I mean, nobody buys on the way down. I think people always want to buy on the way up, but then you end up chasing the market, right?
So they were motivated to buy right out of the gates in January.
Absolutely. Yeah.
Okay. So then my second point is the new year buyers also bought early on. So your phone rings January 5th. It's Becky and Dan. They're looking for their first house. You're smiling at me because I went with Becky and Dan.
Yeah, I remember Becky.
We're Jenny and Todd. We're looking to buy our first home. It's true, though. We get these calls. And so you start working with Jenny and Todd. They're not still looking, right? Like the people you had in January coming out of the gates, they bought.
Yeah.
Okay,
yeah.
So that's my second point. Third point is new buyers have declined across the board. So speaking of like the early year buyers have already purchased, I would say, and we're doing pretty well. Like I'd say we're ahead of last year from a volume standpoint, but we're doing a lot more listings. And I would say that overall, the number of inquiries we've had might be a bit lighter, let's say.
I think I noticed that from the very beginning. The buyers that were out there, at the end of last year or the beginning of this year, they were all serious buyers.
Yeah.
The tire kickers were gone. And
Right.
I think we're going to talk about this a little later, but that is an interest rate story.
So it's quality over quantity.
100%.
So you might have had 8 buyers reach out in January of 2022 or 2023. This year you had 4, but they were all ready to buy, and they did. Whereas in previous years,
and there was enough good inventory that those bought. Right. They bought, right? We found good deals and good opportunities, and they bought. So
Right.
over time, there were less and less of them out there, I think.
So my fourth point: investors are on the sidelines. I think we could talk for hours about this, but let me just leave it there. Fifth point: buyers are waiting for interest rate cuts. Again,
ties into investors, I think, as well. None of the condos rent out cash flow positive with these rates right now.
Right. And so the investor being on the sideline, I think, oh God, if we open that up, I'd probably go off on a political tangent. So maybe we should shelve it. And the sixth point I had here is prices are too high relative to rates. And what I meant by that was, I said, May of 2024, what's the carrying cost for that same house in 2021 when rates were lower? So if you say, okay, I would have paid more in 2021, but I would have had a way lower rate, now you can pay less. But of course, the acquisition price is
right,
lower.
But it doesn't balance out.
Okay, so those are 6 points. That's why I believe that there are fewer sales. It's sort of where have all the buyers gone? That was the blog post I wrote, and I, of course, tied it into a great song, Where Have All the Cowboys Gone? So I want to pick up that thought you were talking before about the tale of two cities, houses versus condos. Explain to me what this means.
So it's a tale of two cities. When I look at the average stats, I can look at the average price or the home price index. That includes everything within the downtown core. That includes freehold and condo. And I think these two spaces are doing drastically different things right now. To some extent, like we're not making new land. So, freehold real estate in Toronto, certainly over the medium term it feels invaluable.
Yeah.
I mean, like it's always going to hold its value. Condos, on the other hand, I mean, the supply has risen much faster than the freehold listings, and demand has dwindled much further. So, I think this plays into the investors, which, I know you can speak to, what you think politically about how we built all these condos in the first place downtown. But with interest rates the way they are, that market dynamics completely shifted.
Yes. So
we are seeing a huge influx of condo supply. And although prices are sticky, I do think that segment of the market is probably going to drag down the average price more than, say, the freehold, the semi, the townhouse, or the detached.
Yeah, I think that's a fair point. And I think, Chris had said politically, I think what he's hinting at is that I've gone on record saying it's a very hard time to be an investor because it does not feel like the mayor of Toronto is really concerned with, landlords, people not paying rent. The landlord and tenant board, they're not helping any landlords. And then we have this, movement, this anti-capitalist part of society that are like, oh, you're a landlord, you're evil. And it's like, I'm a high school gym teacher. I just bought this for investment.
This sounds like we're going off on a completely different podcast right now, which I'm sure we could, right? But this is more like the qualitative dynamic around investing rather than like the quantitative, right?
No, but to your point, yes, we talked a couple of times about how a lot of investors are on the sidelines. Some investors are exiting this space. And you raise a very good point about how the market average might be dragged down because there are more condos in the market than freehold. There are certainly more condos. If you were to say 1,000 sales in the year 2000 versus 1,000 sales today, the proportion of condos is way higher than it was because everything built in the last 24 years has been condos.
Yeah, and this kind of goes back to our original point, just like supply and demand. You talk about the absorption rate. It's easier to create supply of condos than it is to create more freehold properties.
Well, it's impossible to create.
Yeah, it's impossible unless you split lots or something, right? Like,
yeah,
but obviously it's far more costly and far more difficult to do that.
And so as far as the condo market goes, again, we're waiting for these stats to come out. You had mentioned absorption rate a couple of times, referred to a low absorption rate last year. For those not automatically in the know, we look at the absorption rate of how many houses and condos are being absorbed by the market. How many are selling? So if you have a month where there are 10 listings, of course there's more than that, but for point of clarification, we've got 5 of those sell. Okay, so it's a 50% absorption rate.
That's a balanced market, right?
Balanced market is 50%. So that's theoretically, of course. So my concern about the condo market, and I had been planning a post about this for next week, is that, and I'm going to go to my stats here. So you had said last fall we had, and again, months of inventory, of course, is the inverse of the absorption rate. So when you said 400% or 4x, the 25% absorption rate refers to 400%.
In October, November of 2023, we had the largest months of inventory I think I've ever seen.
Yeah, and you said that was 4x, right? So, and I'm looking at my stats here. Last fall in the condo market, and again, this is for math people. They're like, what the hell are they talking about? The inverse. In September of last year, we saw an absorption rate of 24.5%, which of course translates to a 4x if you do the inverse. So 24.5%. So you're saying that for every 100 properties listed in the 416 that are condos, 24 and a half are selling. So making the point about the blog post I'm going to have next week, when I look at sales or listings, and I'm looking at my chart and the line is green, you are either at the very top, away from all the other color-coded lines, which are 2018, 2019, 2021, et cetera, or you're at the very bottom. So picture a graph. We've got all these intersecting lines, and then there's this one green one on top. That is new listings in 2024. Or the inverse, which is Sales, it's at the very, very bottom. So we're seeing the lowest sales in the condo market in the 5 to 6 year period, the highest new listings, and that's resulting in an absorption rate which is plummeting. So for some context, folks, and excuse me if you don't love math, but if you look at May, so again, we don't have the June TREB stats, but if you look at the absorption rate in the 416 condo market in May, you've got in 2018, 57%, 2019, 60%, 2021, 56%. Do you see a pattern here? Last month, it was 31%. So condos are being absorbed half as quickly. Now, here's a question for you, Chris, and this is gonna be kind of rhetorical. What happens in any other market when demand plummets?
And supply remains constant.
Yes.
Yeah, prices drop.
Yes.
Yeah.
So here's the funny thing. Let's say, or not so funny, again, depending on whether you're a buyer or seller, let's say that you are in a market that makes widgets, just to use the buzzword from all those people who went to business school, and you're making widgets, and there's a market, and demand drops by 75%. What happens to prices?
They drop.
They don't drop, they plummet.
Well, yeah, okay. I guess it depends on what you do with your supply.
Right. So in our market, we're seeing an absorption rate. Last fall in the condo market, as I said, 24.5%. And I know that number off by heart because it's the most ridiculous number I've ever seen. And last month, 31.4%. So why aren't prices dropping?
Because they're sticky, right? This isn't a widget company. You've got how many mom and pop investors, you've got thousands and thousands and thousands of different landlords and property owners, and they're all doing their own thing. And probably some of them are holding on for a better market, waiting to see what interest rates do. But at the end of the day, nobody's giving away real estate unless they have to, right? It all comes down to their motivation.
Chris used some business terms there. It's sticky. So let's say there's a product, I don't know, let's say it's milk. Milk could go bad. If you have a ton of milk.
There's a shelf life. There's no shelf life here, right?
Right.
I mean, the clock is ticking. If they are motivated, it's probably something to do with their interest rate, right? Or what their financing situation looks like.
And that's not representative of the market as a whole.
It's certainly not homogeneous, right? Everybody's got their own finance.
Right. So point being, I think when these TREB stats come out, obviously I'm very interested to see what happened with the overall sales data. I'm interested to see what happens with the overall average home price, which you and I had said earlier, we think is probably going to drop. Sales, of course, are probably going to be at or near an all-time low. In the condo market specifically, which I'm looking at because Chris has this great analogy, the tale of two cities. Freehold
sorry to interrupt. I think that's going to be the most crucial piece of the puzzle moving forward is that never has... I mean, maybe the condo market dragged prices up when it was on a tear,
sure.
Right? I mean, you do that, but I think that this is going to be a huge outlier. I mean, this is going to, they're going to be very different. I think the condo market is going to drag down average prices.
And we have right now, so we have a listing for 3.2 million. We have a listing for 2.2 million. We have a listing for $999. And again, I don't make a living telling people not to list properties for sale with us, but I had a conversation with a client the other day that wants to sell a property downtown on Bay Street. Are there a lot of properties for sale on Bay Street right now?
A lot of condos.
So I said to them, okay, guys, and again, I can't pinpoint the market, not as well as I did for that Westwood listing earlier in February, but I can't tell you the market's gonna be better in the fall, but it's a calculated risk, is it not, to say, right now is a known variable, which is that the market right now for a one-bedroom condo in Bay, extremely dated, in an old building with high maintenance fees, it's not a great market. So calculated risk, folks. Do you want to say, I'll eat 2 months of cost because the tenant had just left, and then I'll put it out after Labor Day? I don't know that the market's going to be any better, Chris, but it's certainly not going to be worse.
No, I don't think so. I think that the inventory will peak at some point and it will take some time for the market to clear. And when it does, I think, prices will find their point of stability. But when that's going to happen, I'm not 100% sure yet.
And so again, I go back to, for the third, fourth, fifth time, last year, September, October, November, this is absorption rate in the 416. We have 24.5%, 27.7%, and 33.4%, which are hysterical numbers considering if you want to compare them to, I'm looking at 2018, 19, and 2021, because I don't look at the pandemic year. And all these stats are in the 50s, 60s, 70s, and 80s.
But even if you went past that and you went back into 2015, 16,
sure.
Right? I mean, I think,
yeah.
Has it ever been like this much of a buyer's market in the condo space?
And I'm a visual thinker. So like, again, I apologize to those listening if it wasn't very clear when I'm trying to describe charts. Picture a bunch of intersecting lines, and then there's one line above all the rest. We call that an outlier. It would be like, here's a very obscure reference. Do you remember when Marion Jones, who might have been on steroids, she beat everyone in that race in the 100 meters in the Olympics by so much? Sports Illustrated did a fold out. On the front cover, it was like 7 women. And when you folded it out, she was so far ahead that they had to put it on another page.
Right.
Chris is like,
sure. I think they were trying to make a point.
Yes.
But that's another point in here.
Chris is like, enough with the pop culture. You wouldn't believe what it's like in this office. Everything I say is from like Superbad.
Trying to stay focused here.
I'm sorry, Chris. Point is, like, when I look for an outlier, my reference, I could be like, it's like Marion Jones at the 2000 Olympics. If I didn't explain it wouldn't make sense. You've got to
give it some context.
So that green line, the thin green line, it is so far ahead of everything else as far as listings goes, and it is so far below as far as sales go. And I want to see where that's we're going to look in June. So move on here. You had mentioned, of course, as far as mom and pop investors go and why some people might be selling these condos, why some people might not necessarily. I think interest rates has a lot to do with it. So we saw a cut in June. Everyone went absolutely crazy. Did you see any impact on the market?
Not really. I mean, a quarter point cut, like when you crunch the numbers, it's not going to make a drastic impact on buyers financing. But the psychology, right, of, it almost had a bigger impact leading up to that cut.
Yeah.
Right? In January, February, March, everyone was talking about how low interest rates are going to go. How many cuts are we going to see?
Yeah.
And now we're in the summer. We've seen a quarter point cut. Maybe we're going to see another quarter point cut. I don't know.
Yeah.
It hasn't had a real impact other than just kind of like that buyer psychology, that emotional, the idea of what's going to happen in the future.
Yeah. So guys, let's take a quick break. I want to really flesh out this thought on interest rates. We'll be back with that in 1 sec. Welcome back. So a question, was there any change in the market when we saw that 25 basis point interest rate cut in June?
The simple answer, no. No, I think the bigger change was the lead up to that interest rate cut. I think people wanted to see more.
Yeah. And so I guess the next question is, and the question coming into this year, we did a contest on Toronto Realty blog, which a lot of the readers responded to, I think 22 people. 3 questions. How many rate cuts will there be? What is the total number of cumulative basis points? And then when will the first rate cut be? So of course, when June happened, I was like, all right, we have the first data point. And I think 4 people had said June. Out of 22 people, 2 people said there will be no cuts. But what happens in July? And then what happens in September? And give me the scenarios as you see it. If this happens, where does the market head? Because to your point about absolutely nothing happening, I think the lead up to it was important. And I think that plays into what you had said earlier about psychology.
Yeah, I think I think it already has to some extent. I think people are a little bit more bearish on cuts now, and that's probably making people sit and wait and see what happens. Mm-hmm. If rates stay higher for longer, I think we're going to continue to see inventory rise as more investors exit the condo market. And I think that'll probably continue to have some downward pressure on pricing.
Yeah, in the condo market, maybe. And I think, if you had mentioned earlier, if your mortgage payments, you're buying a house and it's $4,000 a month, does it really matter if it's $4,000 or $3,800?
Yeah, no, I don't think you're going to sell your house for that, right?
But are you not going to buy? Are you going to put your plans on hold because I can't afford $4,000, but at $3,800, I'm in?
No, and that goes back to my point about Tale of Two Cities. Is look, we have a set supply of freehold properties.
Yeah.
We've got what feels like an infinite demand for people who need new homes, and if your life happens, right? You have kids, I've got clients living in a 2-bedroom condo and they need to move into a semi-detached or detached home. There's a good case to make that it's a good time to do it when the market's a little bit depressed, right? I mean, moving up in a down market makes sense on paper.
Yeah, and you always say buy and sell in the same market, you can't get hurt.
Yeah, I think you want to hedge out that market risk, right? So if we have a conversation with all our clients, whether it's a good time to buy before you sell or sell before you buy, but quite simply, the most important thing to do is make sure that you buy and sell in the same market.
So if we don't see a rate cut in July, Is it because it's, and what is it, July 24th or 25th? Is it because, everyone's last month, oh, did you see inflation went up to 2.9? Like, I'm sitting there thinking, holy crap, we're arguing over 30 basis points. Like, does this matter? But I mean, is that the reason we're not going to see a cut, or is it just we were never going to see back to back? And then does that mean there's going to be a second cut in September?
Yeah, I mean, this is like a macroeconomic discussion, right? I mean, there's a lot of different things that go into their decision to make a rate cut. I think on the whole, we're living in an inflationary world right now, right? Mm-hmm. I mean, climate crisis, supply chain disruption, right? Like the reversion of globalization. And then you talk about what the Fed's doing in the States. I mean, there's a lot that goes into that. Yeah. So, it's impossible to say for sure. I think that we will see rate cuts, and I think that, that will have an impact at some point. I just don't know when.
Yeah. So, I mean, I'm predicting, not that, again, I always say I'm not one for prediction, no cut in July. We're going to see a cut in September. And then only because my mortgage renews at the end of November, I'm predicting 9 more cuts.
Yeah. No, I renew in 2026, so I think I'm okay.
Listen to this guy, honestly.
Although I did renew like right at the bottom there during kind of the COVID situation. So
I mean, it is what it is. I'm not moving or anything like that. And I think all this talk about, oh God, in 2025 comes along or 2026, the market's going to be flooded with properties because these people can't afford their rates. It hasn't happened yet. Yes, I've seen a few people that have, said, well, I can't afford it, I need to sell. And obviously prices are lower, but I just don't think it's enough to move the needle. So the fall will be interesting. I think that we're all kind of aware the market is slow. It was tough in June. Chris gave us kind of the update as to how we got to July by basically starting as far back as last fall. But I think when you look at any market, it's always a question of how did we get here? And we're literally living proof right now as we're in July, moving into August, of how the market will take shape, let's say in September, October, November, is sort of what's happening with respect to the ratio of supply and demand, the absorption rates coming up, the TREB stats being released, potential interest rate cut in July, probably not, maybe one at the beginning of September, right as the fall market starts. And then we get into the September, October, November, which is always a really condensed market. It's 3 months, unlike the spring, which is 6.
It goes by like that, right? It's like super fast.
It does. And then, again, not one for predictions, but what happens in the fall? Because no conversation about real estate in the summer, what's in store for the real estate market this summer, I think is what we're titling this podcast. No conversation about that is complete without talking about maybe what we think is going to happen in the fall.
I think you're going to see some great deals over the summer if you can find the right property.
Listen to this guy.
I'll preface that. Like the best time to shop is in a depressed market, right? Like August, even in a good market, is the best time from an average price perspective to buy.
Yeah.
I think the fall, we're going to see some more good inventory. I think the freehold, look, prices have remained amazingly resilient in Toronto when you look at them compared to interest rates, right? I mean, you think about interest rates versus pre-COVID to today, your financing cost has tripled probably, maybe even some cases more. And prices, they've been up and down, but they've held pretty solid, right? I mean, we're just like, there's a lot of demand for freehold, and there's not a lot of supply. I think the condo market's going to be a little bit different. But again, I think that's an opportunity. I mean, you bought 2 condos.
I did.
I think, right? I mean,
but that's the irony. We're talking about, and don't get me wrong, like I'm talking about these really bleak statistics. This is an opportunity. And like, I just personally couldn't pass up the opportunity to buy something on the cheap, but I have a 20-year investment horizon. Or I'll give them to my kids one day or something like that. And again, the political conversation about, what it's like to be a landlord, and we're not really getting a lot of help. We'll save that for another podcast. But for me, looking at these statistics and, what's the expression? No one wants to catch a falling knife.
Right. No one wants to buy on the way down. It's just like, again, it's like buyer psychology. But yeah, I think, that I agree that, over the medium term, like I'm bullish on Toronto real estate. I think we're going to have more people. I think we're going to have, the way the pre-construction market, we're not going to talk about that today, but we're not building new homes. So whatever glut of supply we have right now, once that market does clear, we're going to be right back to square one. We're going to, I mean, I hate to say it, but I mean, I think we're setting ourselves up for a housing crisis, which is worse
in 3 to 4 years. Yeah, and that was something we talked about earlier today. So when Chris said, we're not going to get into it now, in a nutshell, the theory goes, no one is selling pre-con, and in order to build, you have to pre-sell. So if we have 18 months where there are 0 pre-con launches that result in sufficient sales to build, then fast forward the 3 to 4 to 5 years that it takes to build, that's when we're going to see a massive deficit in the condo market. So to Chris's point, yes, I've picked up a couple of units. I think that they're so cheap. And when we're looking at these statistics in the condo market with the absorption rate, which we've really hit on, it's not going to get any better. And the June data will show that. And you might see a little uptick in that data in the summer because there won't be as many listings. But as we move into the fall, I think it's a great unknown. And so Chris is saying it's a great opportunity. I'm often on the listing side saying, boy, it's going to be scraping and clawing. I don't want to turn this into a hallmark moment of, it's a great time to buy, but with any challenge does come opportunity.
Absolutely, right? I mean, I don't know, that's like the best investment advice ever, right? Not that we're just talking about strictly investment, but buy while others are fearful.
Who said that?
Warren Buffett.
Wow. Amazing. Okay. Well, thanks for doing this. I think Chris has a wonderful drive plan to Blow Rest Village. It's only an hour and 10 minutes with traffic from the office. Do we have time to talk about the roads and highways in Toronto, or is that another day?
You know what? I'll call you from the car. I got about an hour and a half. So I got plenty of time to chat.
Oh my God. Okay, guys, thank you so much for watching on YouTube, for listening wherever you get your podcasts. Please remember to like, comment, or subscribe. And if you are on YouTube, drop us a comment. I love responding to them. Thank you again for listening and watching to The Last Honest Realtor. We'll see you in this space next week. Bye for now.